Hi class and welcome back. Today we're continuing our discussion on impairments of operating assets, long-term operating assets. So what we're going to do is look at a second category, which is the indefinite life intangibles. Okay, so looking at this category, we're going to look at our 4 items on the left and talk about each one. And then after this, we'll go through a very short numerical example. Okay, so asset grouping. It's a little different than property, plant, and equipment, and basically if you have more than one intangible that are indefinite life and they work together, then you can group them. Otherwise, they should be individual. And so often what you're going to find are individual ones on your homework and any quizzes. When to test? You have to do something annually. So there are 2 options. Companies can either do a qualitative test where they look at a number of factors and determine if it's more likely than not that there's been an impairment. If that's the case, then they have to go on to the next step. A second thing they can do is just go straight to the quantitative test and go ahead and use this formula down here. So either option is fine. Let's assume that they've done a qualitative test and it looks like there might be a problem. So they go on to do how to test. This is fairly straightforward. We simply take its book value, which more than likely is its acquisition cost. We subtract out our fair value. That's usually given to you. It always is. And then if this is positive, then that means our book value is higher. And if our fair value is lower, that's a problem. We don't want to overstate our operating assets or any asset for that matter. So that would be an impairment loss, and we're going to have to do a journal entry. And then finally, with subsequent measurement, what we're going to do is after we do the journal entry for the impairment, we're going to have the fair value be the new book value. Okay, now let's go through a numerical example. In this example, what we have is some kind of renewable license, and it's very likely that you're going to renew it every once in a while, as often as you need to, so it's considered indefinite life. So what we're going to do is we look at its book value. We acquired it for $100,000. I threw this up here just because it could happen. Let's say they give us undiscounted future cash flows. They add up all the future years that you might be using this license, and they determine that the undiscounted cash flows are 105. Well, guess what? That doesn't matter. They're trying to trick you. Okay, watch out for that. All right, so we don't use a step 1 assess recoverability test when we deal with indefinite intangibles. All right, they give us fair value as well. So what we find out is that qualitative assessment has been done, and it looks like it's more likely than not that there's been an impairment. So we have to go to how to test. This is our actual test. Book value minus its fair value will give us our impairment. As long as this is positive, that's the amount that is impaired. So we can see that the book value is $20,000 more than what it's really worth in terms of fair value. It's overvalued on the books. So we have to do a journal entry to fix that. So here's our entry. We're going to debit the impairment loss for $20,000. We're going to credit the asset directly, some kind of license, $20,000. And when we do so, that $100,000 will be the debit side. We take off 20. The new value will be $80,000. So from this point going forward, the carrying value, the book value, will be $80,000. And that's how we'll go forward in the future. All right, that's all there is to it. Now let's take a look at goodwill.